Every cause has an effect, and printing or typing a massive amount of currency into existence is a cause with a well-known effect, and that effect is inflation. Now we can make up any excuse under the sun as to why inflation won't occur, but Occam's razor says that the simplest explanation is usually the correct one, and I don't think it's any different this time. In this video, I'm going to tell you how I've been positioning myself over the past couple of months to both protect myself but to also earn substantial returns over the next few years. In some of these positions, I'm already up over 100%, but it's not too late for you to get in now. Watch this one through to the end because I promise you're going to get value from it. What's up guys, my name's Kieran and you're very welcome to the channel. I'm here putting in the work to bring you valuable content so that you can make better investment decisions. If that's something you appreciate, then please smash the like button, it really helps me grow the channel. And if you haven't yet, consider subscribing to the channel and turning on the notifications bell so that you get notified when I release future videos. And with that being said, let's dive straight into it. As soon as I've had my coffee. Okay guys, so if you've been following this channel, you know that I've been heavily buying Bitcoin. But I've also been heavily buying gold and silver. And in this video, I want to talk specifically about silver. Silver has been making some big moves recently, and I think there's much further left for it to run. You see, gold has always been the safe haven asset, and it started its bull run back in Q3 of 2018 from its low of $1,200 an ounce. Since then, it's continued to rally, and during this time of economic uncertainty, it's been reaffirming its position as the safe haven asset as more and more funds have been flowing in from institutional and retail investors. Just last week, it hit a new all-time high of over $1,900 an ounce. And to me, this is no surprise because there's really not much choice left for capital allocation. Bond yields are at an all-time low, making investing in bonds a guarantee to lose money. And the stock market then is like your bipolar uncle. He's got completely disconnected from reality. And I don't know about you, but I for one am fairly uneasy about giving my money to anybody with bipolar or some sort of mental instability. While they might be on top of the world today, you know it's only a matter of time before they do a full 180. Gold then is reaffirming its place as a store of value. And in my opinion, it's becoming the preference over bonds and equity for the reasons I just outlined. So where does silver come into all this? Well, you see, gold and silver are like two peas in a pod. They always move together. Often silver lags gold, but eventually it always catches up and often overshoots it on a percentage return basis. Take for instance the 2008 global financial crisis. Both silver and gold came under serious selling pressure as investors needed to sell assets to get much needed liquidity. But as is usually the case, silver fell further than gold. Both metals actually bottomed well before the stock market did. And while silver did lag gold in its recovery, it eventually went on and overtook gold and hit all-time highs of $50 an ounce. This behaviour was repeated again in April of this year, when investors sold off gold and silver to gain much needed liquidity once again. And while the decline in gold prices was relatively mild, silver got an absolute hammering. But all the while silver prices were getting hammered, silver supply became under pressure as silver mines began getting shut down. This was partially offset by the reduced industrial use cases, as essentially the economy was going into lockdown. But we did see an increase in people looking at silver as an investment. And we actually saw a weird phenomenon where the price of physical silver was trading at a premium of about 35% to the futures price. And in fact, in a lot of cases, you couldn't even find physical silver to buy even if you wanted to. However, just like after the 2008 crash, silver has since rallied massively. And I suspect that this momentum is going to continue and silver is going to ultimately reach all-time highs again, just like it did back in 2011. Now, why do I believe this? Just because I think patterns repeat? Well, yes, that's one, but there's also two other reasons. As I said, gold and silver are two peas in a pod, and where gold goes, silver follows. So in order to forecast silver prices, we should look at what we think is going to happen to gold prices in the near term. And when I say near term, I'm talking the next 3 to 5 years. One way we can forecast gold prices is if we look at M2 money supply. And we can do this because historically gold prices have increased in tandem with the increase of M2 money supply. But Kieran, you're saying, what the hell is M2? Well, M2 is a calculation of the money supply that includes all elements of M1 as well as near money. Now M1 includes cash and checking deposits, while near money refers to saving deposits, money market securities, mutual funds and other time deposits. So these assets are less liquid than M1 and not as suitable as exchange mediums, but they can be quickly converted into cash or checking deposits. So M2 is like that line item you see in companies' balance sheets, which is cash and cash equivalents, and it's a measure of the amount of currency in supply in the US. So why does gold increase alongside M2? Well, it's not surprising because gold is the original measure of true value and its supply is relatively fixed. So as more and more currency gets printed into circulation and its value goes down, we see the value of gold as measured in this currency go up. If we look at this chart that I've taken from linalden.com, we can see that gold follows M2 but with massive volatility. So post the 2008 crisis, for instance, gold shot way above its fair value. And this is unsurprising though, considering the level of uncertainty in the financial markets at the time. It then came crashing down to near fair value and has traded around that level since 2015. So we're at a stage now where there's no reason to think that M2 money supply won't keep growing. In a world of complete uncertainty, I think this is the one thing that I'm probably most sure of. Central banks are going to continue printing unprecedented levels of currency into existence over the next couple of years. They're going to do this in an attempt to prevent a total collapse of the economy and a mass wave of corporate and personal bankruptcies. And to give some perspective, this time last year, M2 supply was increasing at a rate of about 5%. Compare that then to the most recent figures, and basically on an annualized basis, M2 currency supply has increased over 50%. Never before have we seen this level of printing, this level of change in M2 currency supply over such a short period of time. And it's showing no signs of slowing down. Looking at the chart and comparing the latest vertical upswing to the blip in 2008, it really gives you a lot of context. So it's in my opinion that this is only going to continue driving up the price of gold and alongside it the price of silver. I wouldn't even be surprised if we see an overshoot in fair value for both metals, just like we did after 2008. The second reason I'm bullish on silver is the gold and silver ratio. This is an age-old ratio that compares the price of gold to the price of silver. And over the past couple of 100 years, this ratio has averaged about 28, meaning that you can buy 28 ounces of silver with every ounce of gold. And this makes sense when we consider the fact that silver is about 18 or 19 times more abundant in the Earth's crust over gold. However, when we look at the chart, we can see that since a low of below 20 in the 1970s, this ratio has been going one way, and that's up, meaning that the price of silver has been decreasing relative to gold, or the price of gold has been increasing relative to silver. We can see that this ratio dropped to its historical average post the 2008 financial crisis, but has since rallied back up to make new all-time highs. In April then of this year, when silver was at its lowest, the ratio peaked at 114. It's now dropped to 80 and has a long way to run before it returns to near historical averages. Now look, nobody can say what the correct gold to silver ratio is. But if we let history guide us and take an average figure of 28, well then based on the current price of gold, silver could reach a price of $68 an ounce. That implies a near 300% upside from today's price. Now, are we definitely going to see a reversion to the mean in the gold to silver ratio? Honestly, I have no idea. But what I can say is I expect the price of gold to increase over the next 3 to 5 years. And I expect the gold to silver ratio to decrease over the next 3 to 5 years. To what levels, I don't know, but both of these statements imply an upside for silver. In my base case, gold reaches $2,500 an ounce and the gold to silver ratio reaches 50. That's $50 an ounce for silver. over 100% upside from today's price and in line with the previous high in 2011. Now in my bull case, gold reaches $3,500 an ounce and the gold to silver ratio goes to 30. That's $115 an ounce for silver and a 500% upside from today's price. Now I'm not going to get into what percentage probability I'm assigning to my base and my bull case, but let's just say that I think this is an asymmetric risk-return bet. Okay, so that's all good, but how am I investing in silver? Well, I'm buying a physical silver ETF and I'm buying silver miners. One miner I've been buying is Pan American Silver. I started my position at $16 per share at the beginning of April. It's now up over 100%, but I have been averaging up, so my average buy price now is around $22 per share. But overall, I'm up 60%, and I think there's still plenty more room to run. I've also been buying First Majestic Silver. I didn't get in as early, but I'm up about 30%. In terms of an ETF then, I've been buying Sprott Physical Silver, and I'm up about 30% in that position as well. At this stage now, I've got about 5% of my portfolio invested in silver and I have about 6% invested in gold. And to be honest, over the next couple of months, I'll probably continue to up that exposure depending on how things play out. I also have 25% of my portfolio in Bitcoin. And if you want to hear my reasoning behind this, then check out 2 recent videos I did on this. I'll link them down below in the description. Now it's your turn to let me know what you think. Is there an opportunity here investing in silver? What do you think of my base and my bull cases for silver prices? Do you think I'm off the mark or do you think I'm onto something? I'd love to hear your opinions down below in the comments. Also, if you haven't yet, I'd really appreciate it if you gave the video a like. It really supports the channel. And if you're not a subscriber yet, well then now's your opportunity. Come on board. I'm working as hard as I can to bring you quality investment content so that you can make better investment decisions. Okay guys, that's it for this video. Thanks so much for watching. Have a smashing day and I'll see you in the next video.